Oh, hello there, it's John from Barefoot Accounting, hopefully the right way around this time. Today I wanted to talk a bit about cloud accounting. Now, I'm a big fan of it. I think it's an amazing tool, it can do a lot of the heavier lifting and really make your accounts far more accessible and usable. But like any tool, you need to use it correctly. So I thought I'd go through a few of the areas where people tend to get into a bit of a pickle with it. Now, one of the issues you've got is that, and actually I think the developers do a blinding job at this, is they make the software very flexible, and they also make it very user-friendly considering what they have to take into account. Now, being flexible is a bit of a double-edged sword, because you think of how many different types of business there are. Some deal purely in cash, some raise invoices, and then you've got all the crazy VAT schemes and everything. So it's important to use it right in the right way for you and your business, because there'll be alternative ways of doing things which might get you in the same way, or it might do things slightly differently to what you might want. Okay, so before I go into the detail of it, I'd like to just generally discuss how these systems work. And it doesn't really matter what system you're using, because the general principles go back kind of a couple of centuries, to be honest. So most systems have three main sections. First one we'll look at is the sales ledger, or the customers. And this is essentially a list of your customers and allows you to issue invoices and even mark off the payments to your customers. And what's really handy, it gives you a list of who owes you what. One thing to bear in mind, when you put something in as, say you issue an invoice, it clocks it up as a sale, which is all very nice. And it also says, oh, hang on, this person owes you some money. Then on the other side, we got the purchase ledger, which is your list of suppliers, which is the same thing, but kind of for the outgoings. So here you can put in the bills you receive and, mark the payments against them. And then the third one is the bank. Now this basically keeps track of the cash you've got. And what's really handy is you can set up bank feeds with your bank accounts. And what this does is brings in all the transactions from the bank into your accounting software, unless you're with TSB. It doesn't do it if you've got a cash, because it can't really link to your piggy bank yet, but I'm sure someone will come up with an app to do that. Now, the main thing where it goes wrong for people is the interface between these three bits. So if you've got a bank feed set up, the key rule is, unless you really know what you're doing, is the only transactions that should go into the bank are from the bank feed. Now, it is possible to unknowingly stick things in the bank. And what normally happens is someone gets a payment from a customer, rather than seeing the payment in the bank and going, oh, that's from this customer paying that invoice. If they go to the customer list, they see the customer, see the invoice and mark it as paid. And what that does is that effectively says, okay, this person doesn't owe you the money anymore, but then it puts a corresponding payment, money coming in, into the bank account. Now this is on top of your of what comes in through the bank feed. So effectively you've doubled up the cash coming in. So that's one way people get muddled up, and the same can work on the other side of the payments with the suppliers. Now, one reason you might want to manually put in a payment is, like I said, if you get a cash payment, because you've not got a bank feed for that. Also, maybe even if you've got a cheque or something, you might want to put it in as a undeposited fund, because you don't want to be chasing a customer for payment just because you couldn't be bothered to go to the bank to deposit the cheque. And again, you can start adding more complexity with Stripe and other payment systems. So that's the one main area people get wrong, is putting more than, deliberately or not, putting more than one transaction into the bank. The other area is the matching. So when you're going through your bank feeds and you're explaining transactions, you can have two options really. One is to mark it as an expense or some income item. The other one is to match it against an invoice or a bill you've got. So you have to be a bit careful here, because firstly, some systems will suggest what to match it against. So if you've so this can save a lot of time, but you do have to be careful, because it will generally look at the value and then go in date order. So if you issue loads of invoices for the same amount to lots of customers, it will just pick the first one. Also, the amounts might not be the same. For a customer might pay 2 invoices at once, so the amount's not going to tie up. You might have foreign currencies coming in, which is really going to mess up everything. So just be a little bit careful there. You know, it will deal with it, but you just have to apply a little bit of thought and not just go, oh, this is all automated, great, and just press click, 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 click. The other thing is, if there is something to match up with, to match it up. So what could happen is if you've got a bill that's come through and you've paid it, you see it in the bank, and you don't match it up, when you put the bill through the system, it will mark it as an expense, and then when you mark it as a payment, it will just double up the expense. So that's another area it can go wrong. One thing about matching as well is if you're using other systems to get your invoices in there, watch out for timing. Because if you go through sorting out your bank before you've actually put the invoice on, you're not going to have anything to match up against. And then when you put the invoice in the system, it's going to then suddenly appear again and double up. Okay, so they're the main areas, and it's to do with essentially doubling up on your expenses or your income on your P&L. So I hope that was helpful. The other thing to bear in mind with this is, I think the software is brilliant and there's loads and loads of reports, but it's worth spending a bit of time working out what the reports mean. You know, you don't have to look at all of them, but just a few that are going to help you and what they really mean, because there can be a big difference between profit and cash. You know, as I mentioned here, you know, you issue an invoice, it shows you a sale. That's very different to actually getting the payment from the customer. So, you know, spend a bit of time to actually understand what these reports tell you, and you're going to have a really powerful ally to help you manage your business. Anyway, take care now. Hope that helped. Cheery, bye.